A few days earlier, US President Donald Trump was heard calling India a dead economy. President Trump had been meaning to punish India through tariffs. Why? For doing oil business with Russia. Well, guess what? India has now delivered a GDP shock to the US president. India's GDP surged by 7.8% in the first quarter of financial year 25 to 26. This marked a 5-quarter high and also beat most forecasts. With that, India remains the fastest growing major economy in the world as China's GDP growth rate came in at 5.2% and United States at 3.3%. In the same quarter last fiscal year, India had registered a 6.7% GDP growth. Analysts are now raising India's GDP growth forecast for financial year 26. The answer to President Trump is clear and hard. The Indian economy is not dead. Rather, it is screaming growth and defies US tariffs. This showcases resilience and, more importantly, it undermines strong remarks made towards the Indian economy. This also highlights Trump's tariffs had a negligible effect on the Indian economy in the first quarter of financial year 26. So what are the factors behind India's GDP surge? What drove the Indian economy to rise this high? Let's explain in this episode of India on the Rise. According to reports, government spending is likely to have played a key role in supporting growth. In April to June, the centre's gross capital expenditure surged 52% year-on-year to 2.8 lakh crore rupees compared with 33.4% growth in the fourth quarter of financial year 25 and 35% contraction in the first quarter of financial year 24. New project announcements also rose to 5.8 lakh crore rupees in the first quarter of financial year 26 and project completions surged to 2.3 lakh crore rupees. India's exports got a timely push as many goods were shipped out before the steep US tariffs kicked in on 27th of August. A good monsoon gave a lift to agriculture, growing 3.7% in first quarter compared to 5.4% in the previous quarter. That boosted rural income and spending. Together with rising rural demand, agriculture, construction and services all saw a meaningful pickup. India's retail inflation is at an 8-year low that amplifies the positive impact on real GDP growth of the country due to pricing power. GDP growth in the April to June quarter was driven by the services sector, soaring to a 2-year high of 9.3%. Early July data shows the sector's strong momentum continues. The services sector, public administration as well as financial services held up strongly, with services growth value added GVA projected to be among the highest in recent quarters, up to 8.3% according to ICRA estimates. For the unversed, gross value added or GVA tells us how much value the economy actually creates. It's like measuring what industries such as farming, factories or services add to the economy after removing the cost of inputs. So according to data from the National Statistics Office, the GVA of the financial services sector rose 9.5% in the first quarter of financial year 26 as against 7.8% in the fourth quarter of financial year 25. The public administration sector grew 9.7% versus 8.7% in the previous quarter. Overall, the GVA grew 7.6% in the first quarter of financial year 26 versus 6.8% in the financial year 25 first quarter. This surge in services helped offset the softness in industry and agriculture. The Indian economy has been resilient till now. However, many economists expect a slowdown in growth in the upcoming quarters. The 50% US tariffs are set to play a spoilsport in the July to September quarter, and thereafter, according to economists, with GDP growth likely to be hit up by up to 1 percentage point. So what do you think? How will the Indian economy perform in the future quarters? Share with us in the comment section below.
If you like this video, then like, share and subscribe to ET Now.